not necessarily standardized. And the transaction cost of it is too high. So we need to think about how can we leverage the data capabilities that we have today. So Earth observation data, especially remote sense data, satellite data, to either triangulate what corporates themselves are disclosing about ESG, or to go in and fill the gaps, because there are a number of parts of the value chains where we just simply, or the assets where we just simply don't have data to know whether an ESG label will actually fit on it. So really to move into a regime that is more around observed data rather than self-disclosed is one concrete step that we can take.
Thanks a lot for that answer, Marianne, because it's so accurate and so important. And I'll move on to Sachin for this same question, Sachin, because you've been in the sustainable finance space for a long time and you've seen the sector grow. Where do you see yourself? Where do you see the sector actually in your experience, and how it has matured, and how far are we from making it mainstream?
Thank you, Mayu. Thank you, Amidst, for inviting, and good afternoon, everybody. I think I should congratulate you first time that it has been a wonderful organization around, and the topics covered and speakers are very much interesting, and such festivals I strongly believe will help in promoting or raising awareness on the topics of sustainable finance, particularly on the retail audience. Now, your question was, what are the challenges around bringing sustainable finance mainstream? In my opinion, I think sustainable finance has already become almost mainstream, or is already mainstream as of, let's say, last 1 year or so. Today, there is hardly any reasonable size asset manager, the investor, auditor, lawyer, any other type of service provider in the fund industry, particularly, or banking industry, who hardly can afford to say what is this sustainability or what is this ESG. That time has passed. If you do not know sustainability, if you do not have ESG products, if you do not consider sustainability in your investment processes, you are losing, literally, you are losing on your competitive advantage. So that time is, I think this is all the achievement of long work which has been done on the sustainable finance side. But one of the main challenge, in my opinion, we see in further mainstreaming it or making it, let's say, by nature, well, in my opinion, by nature, everything should be sustainable. Everything should have an impact, right? Every type of finance should have an impact. But that's unfortunately not the case. But one of the main reason for that, one of the main reason or hurdle for that is understanding and clearly defining what sustainable finance is. Because since this topic is on the top of everybody, there's a lot of misunderstanding, a lot of confusion also around. Let's take an example. You're using word sustainable finance. We also hear impact investing. We also hear ethical investing, socially responsible investing, microfinance, financial inclusion. People in the mainstream finance industry get confused with all these terminologies. And on top of that, when we say sustainable finance, often it is also seen in the same way as ESG and impact investing is one and same. I think those kind of bringing more clarity around words, defining what we mean by sustainable finance, what are the ultimate, let's say, what we want to achieve, and what in terms of, be it on impact side, be it on the reporting side, what we want to achieve, bringing further clarity on the definitions and terminologies which we use is, I think, an extremely important part of making it mainstream. This way, I think we will make sure that investors understand us, and investors know the products which they invest in. And the other clear challenge which I see making sustainability or ESG investing mainstream is data, because again, in order to take an informed decision based on some data, some particularly ESG related data is a challenge in itself today also. There are a number of providers, data vendors, which work on ESG ratings of companies or impact ratings of companies. Again, all of them use different methodologies. all of the frequency of that data is very much different. So, the decision which is taken ultimately on whether this is a sustainable product, this is an ESG-oriented product or not, is still, in my opinion, not very well informed. And challenge of that is, or why it happens, is because the challenges around data, collection of data, processing of that data, and reporting of that data, which ultimately help whether the company where the fund is investing in or bank is investing in, or in as a retail investor, you or me is investing in, is really sustainable, really taking into consideration environmental, social, governance factor or not. So data is again one of the important point also. Third point, which is a little bit around the PR or communication, because this sector has become so important, because this is on the top of everybody. Everybody started claiming that their products are sustainable. Today, everything has become green, but is it really? And that's the question, right? Often there's first in my first point, I mentioned the confusion between ESG and impact. ESG product is not necessarily making an impact, but they are sold as if they are making an impact, right? So that, let's say, mis-selling or over-promising of impact, over-promising of sustainability from a financial product is also creating confusion, and might turn into, let's say, increase the numbers in a shorter term, but on longer term, it won't help really to find any solution on the sustainable development goals or any problems which we might have on the societal or environmental side. So these are, I would say, three main challenges I see in mainstreaming sustainable finance further.
Thanks a lot, Sachin. I'll have a few follow-up questions to that. And it's interesting you're talking about data, because we had Julie Becker just telling us about the launch of the LGX data portal next week onwards. And I completely agree with you, because it's kind of the starting point, because if your base itself is not right, and that's where I think Lux Flag plays a huge role there, then what's the point of sustainable finance? Seva, I will move to you on the question, because you are at the center of a lot of ecosystem building around sustainable finance, whether it is impact, public market, or individual investors with Solifin. What I want to know from you is more of how your experience has been. How do you think the space has evolved? And with, of course, in a Belgian perspective, as well as at the EU level, and how have you seen it change? And what are some of the challenges which still exist, which were maybe existent 5 years back?
Yeah, thank you very much, Mayo, for the question and for the invitation. So I will start just by telling you that my perspective is a little bit different from the two first panelists, because I'm speaking more from a social entrepreneur point of view, and from also an impact investing point of view. So which is, I believe, much more micro than the one that has been spoken before. So having said that, for me, I really discovered a few years ago the world of sustainable finance, and it was a struggle for me to really understand what was the difference between all those terms, and to make the difference between SRI, ESG, and what we are doing on the ground, basically just funding impact companies, what we call impact investing. And so today I'm managing a network of 19 impact investors. And I'll say that with regard to the topic today, the main challenge today is, first of all, to actually speak about those terms and make it a bit more known, and the differences between what ESG is and what impact investing is. I mean, in the broader public, it's not at all a distinction that they can make. So it's one part of our job is just to explain that there is something investing directly into companies, and there is something else investing on markets, on stocks, and investing in companies that are actually just trying to limit their negative externalities, which is totally different than making a positive impact. A second thing is, for us on the ground, the main challenge is actually the sourcing of companies. Because what I see on the ground is that there is more and more interest and more money pouring down into new funds being set up, or just more money coming into funds. And what we see is that our main struggle is to have enough projects to fund, and enough projects that are worth funding, meaning that they have a sound business model and that they have a sound impact. And this is really our main focus as a network, and my job at Solifin is really to foster the collaboration into deal sharing, but also just deal sourcing, and how can we set up a nice ecosystem at a local level to help those companies and help entrepreneurs actually get a sound business model to be able to invest in them. So this is really the main challenge for us on the ground. And then definitely there is this image issue as well. What we've seen here in Belgium, for instance, recently there was a TV broadcast from our national TV on ESG and on socially responsible investments. And basically, they digged a little bit into some sustainable products that were offered by our main banks here in Belgium. And the results was that, yeah, they were still investing. I mean, they were selling sustainable products, but when you were digging into the details, it was not at all sustainable. And what you can see that the perception then of the public here in Belgium, they just put everything into the same bucket, and then it's really hard for the entire sector to, and even for impact investors to then convince new investors to invest in impact companies here on the local ground. So the image is definitely hyper important for us. And the last thing that I wanted to mention is that actually we need to convince as well investors that their investment is not so risky, or at least that we are today, there are enough companies that can actually offer a nice return on investment, while at the same time providing data on their impact they manage and they make. And this is not at all easy because there is still this perception of people seeing impact investing as something very risky, very early stage, and this is something we're also working on, just like really giving more information about success stories like entrepreneurs who are making great impact and who are basically giving more credibility to the sector. So this is more or less about my point of view for the moment.
Thanks a lot, Sevan, for that. And I think one of the reasons that we try to get different people, panelists and a variety, is to have the different point of view. So because I think it can be definitely a separate webinar on, is impact investing a part of sustainable finance? In my opinion, it is, because at the end of the day, if you look at financing of the SDGs, a lot of it is going towards impact related sectors, and that's where the capital flow is supposed to go. So I think impact investing is an integral part of this discussion. Might not be applicable for a lot of capital markets products, like you said, and the challenges might be more on the social entrepreneur side, scalability and other challenges. Actually, it's interesting because these are questions which came up in our earlier discussions as well. But
Mayur, on that point, Mayur, I would just like to quickly update on that point. When we speak about impact investing, when we speak about SDGs, the need of the time is mobilizing private capital, because the challenges which we have on the societal problems or environmental problems are so huge, and there is a huge opportunity for private capital to invest in those sectors, right? So bringing more money so that we put on those challenges, those sectors, so that we could meet or we could reach, be it the Paris goals, be it the SDGs, be it the 2030 agenda, so all different goals which we have achieved. On the other hand side, applying ESG standards on on investment portfolio is not necessarily bringing new capital to SDGs, right? ESG is more about doing things right, whereas SDG is more about doing right things, right? These are a bit different things. Cleaning your portfolio, putting ESG processes is nice, is important, should be done, but that doesn't guarantee you, that doesn't mean that we are achieving private capital to SDGs and we'll overcome the problems which we have on societal or impact challenges or environmental challenges, right? So these things need to be put in perspective and need to be put differently. By mixing them, impact investing to ESG, by mixing them SDGs to ESG, probably we might feel satisfied for a short term, but we are not achieving anything what we achieved what we want to achieve towards 2030, right? And that's I think that should be the base of everything before starting anything.
Completely agree with you, Sachin, and I'm really keeping a track of what perspectives on ESG from the first session today to now. And I love the example that you said, doing things right versus doing right things. So ESG has got tags of bullshit criteria to this. So it's, but I agree with you. I couldn't agree with you more that that there is a need to mobilize capital, and capital should be mobilized in the right way. And towards the right definitions, because it's a hodgepodge sometimes of too many terminologies being there. But I wanted to take this question now to Marianne, and I think, Marianne, I would love if you could give a bit more background on the Sustainable Digital Finance Alliance while talking about it. What role is technology playing? Because I think that's a topic which is less talked about, but needs to be increasingly talked about because we're running out of time. And one of the ways to bridge that gap is to penetrate via technology. So if you could give a background and, of course, talk about the task force and other things that the Digital Finance Alliance is doing.
Okay, thanks a lot. Yeah, and I think it's a great continuation, actually, of the great comments from my two fellow participants in the conversation, because really sort of the heartbeat of fintech in sustainable finance is aggregation of the few to make to unlock a lot of capital. So it's basically what sort of the comparative advantage that fintech brings to sustainable finance is really aggregation at the investor level to enable all of us to become sustainable or impact investors, because it brings down the transaction costs of aggregating investors and save us money and channeling that into impact assets. And I fully agree with the comment before that there tends to be a higher risk perception on a lot of the impact assets. But if we aggregate micro investors, then maybe the risk appetite goes with it, so it matches better the impact asset. And I think also aggregation at the asset side, what we heard is that that there is a lack of impact assets out there, especially if you look in some of the developed markets. But if we go into developing economies, it looks there's a need of capital because the perception of risk is even higher. And there we can use fintech. What we are seeing now, at least in the Chinese market, is for screening SMEs for SME loans. So leveraging AI and doing that all automated is starting to integrate also green metrics and doing that automated. So just reading your utility bills by natural language processing, etc. So you can do a energy consumption footprint automated, etc. And then incentivizing SMEs to change behaviors by reducing the interest rate depending on then how do you shift your energy consumption, etc. So I think there are many ways in which fintech and adjacent technologies can scale both ESG and impact investing, but really aggregation of the few is sort of the heartbeat of it. And that's also really the mission of the Green Digital Finance Alliance, is to make every citizen on the planet a green asset owner. And we can only arrive at that state of the world by the use of technology. And just to end up by going back to the UN Secretary General's report, which we were a knowledge partner to, that is essentially a narrative around that fintech at sort of the big scale can help us to go back to remembering that really the accumulated wealth in capital markets is to a large extent people's money. It's our pension savings, it's our savings in bank accounts, etc. But we just have put in so many intermediaries and so many jargon, as you said, that we've removed it from the life of people, and that fintech can take it back to be actually something that we can be part of and have a right to have a say in the allocation of. So I'll stop there.
Thanks a lot, Marianne. And actually, if I could just continue, because we got a question, so I'll just blend in some of the Q&A also here. The reason I'm asking you this question, the first one, it's by Laura. And Laura is talking about that there's a great will to finance green and green finance, but most investors are still looking for off-the-shelf projects. How do we finance project design / project development to support small enterprises reach proof of concept to finance their projects? And I'm aware of our conversations from earlier about a lot of the fintech work that is being done on the green finance for small companies. So maybe if you could talk a bit more about that. And Sevan, I would like to come and get comments from you also on this question as well.
Yeah, so I think really starting to integrate green metrics into SME finance is a very, very new development, and it's a very immature market. We've seen quite a lot of SME lending, especially in developing and in the Chinese market. But what is going on now is trying to integrate green metrics and then actually issue green loans for SMEs based on green behaviors. So for instance, energy consumption behaviors, all those that you can automatically track. And then the idea is in the long term to bundle SMEs and issue those as digital green bonds, because really the sort of what fintech also brings to green finance, as we talked about before, the requirements for capital markets is way too bigger assets than what a lot of the green assets are, right? So if we can start to green tech the SMEs, which is early days, but it's starting to happen in China, then we can start to innovate capital market instruments to actually respond to the green financing needs of these SMEs via bundling strategies.
Thanks a lot for that, Marianne. Sevan, if I could throw this question at you as well, and get your opinion on this.
Yeah, I think it's a very key and central question to actually our main challenge, which is the deal flow sourcing. The main challenge, how actually we bring the collaboration, because I told you I'm managing a network of 19 different organizations. There are banks, foundations, credit institutions, private and public funds, crowdfunding platforms, and all those stakeholders, they have a common interest. They need to build this pipeline, and now we're looking for how to make them collaborate to actually build, for instance, impact incubator or an impact startup studio to actually fund the development of new projects and actually help and accelerate from the ID bootstrapping. How can they work together to and we see also link with philanthropy more and more, what we call now venture philanthropy, but there are more and more connection with impact investing and philanthropy to be able to actually work on these very early stage projects and make sure that they align to actually reach out to the seed investors and then to the later stage investors for their journey to be safe, basically safe. So this is a huge challenge we're working on, and there are more and more initiatives that are being taken now. I mean, like, this is something very special also in the impact area. It's like if the funds were not yet very well connected to those incubators and startup studio. In the classical investment, those links are much, there are many more links that are that exist between those different stakeholders. We're trying to bridge this link and to make this link here also, but only for impact. And there are more and more funds and more stakeholders that are willing to invest time and money. Another part of the solution is also to work with former entrepreneurs. So we see that the support organization that works well are the ones where you really have former entrepreneurs who can coach and who can really, let's say, get involved into the project that they coach. And so, so there is this willingness to involve former entrepreneurs and even existing entrepreneurs to help and to support new ventures in impact. So this is definitely a direction to take to bring further. Yeah.
Thanks a lot, Sevan. I think that combining Marianne and Sevan's points, we kind of got to an answer to that question. Sachin, I'll come back to you, like I said initially, and there is a question related to it, which is about related to what you were talking about earlier about data and the need to be exact about the definition of what we're actually doing. So there's a question on EU taxonomy about how it's going to change the landscape of sustainable finance. I want to extend that question and also ask you a bit more to tell us a bit more about what Lux Flag did, because I remember being on the first call with you And you very rightly explained to me the difference between Lux Flag and EU taxonomy and the different terms that exist, which are trying to standardize the definition of sustainable finance. So if you could take that up. Sachin, I think you're in mute right now.
Thank you, Mayur. As sustainable finance becomes more prominent and as more and more public participants like retail investors like you and me are getting more aware and even more concerned about the whole momentum, starting 2015 when we had COP21, where 193 nations agreed on limiting the climate effects and in potential investments, the European Commission took this topic seriously, and since 2015 there have been number of let's say actions, number of projects going on in Brussels with an ultimate aim of bringing more clarity to sustainable finance and bringing more capital towards sustainable finance, right? Towards that, without going into too much details, what happened between 2015 to 2019, but what we have today is something called Sustainable Action Plan for financing European Commission's Action Plan for financing sustainable growth, under which there have been a number of, let's say, legislative proposals introduced. So, for example, minimum, or at least for the member states where we come to a common agreement, common conclusion on what do we mean by green, what do we mean by sustainable, what do we mean by, let's say, carbon benchmarks or green carbon benchmarks, right? Number of legislative proposals have been introduced on that side, and one of that proposal is a common taxonomy, or taxonomy is kind of a dictionary where we would agree, at least in the member states, that what do we mean by green, right? That project was introduced late last year. We already have good amount of work done and list of sectors and activities and economic activities which have direct link to environment and whether they should be covered under calling it environmental or green activities or not. So that's already well defined. In my opinion, now, as you could see, the intensity and volume of the work, it's going to take time. For the time being, since discussion of 2-3 years, we're just reaching, let's say, early stages of defining what do we mean by green. Over time, of course, we have to extend our work in defining what is social, and then what is sustainable, and what is ESG. So this is not an exercise to do in 1 month, 2 months. It will take a couple of years probably to complete everything. But the ultimate aim is, of course, once we have an EU common taxonomy and what do we mean by green, what do we mean by sustainable, that will guide the markets, guide the new market participants, but existing market participants also. On the other hand, on one side we define, on the other hand side we bring regulations so that all those who call themselves green, all those who call themselves sustainable are then obliged to follow this requirements, which are then covered under the regulations. And of course, not only following the recommendation, following the rules and regulation, rules and definitions, but also identically or equally important is reporting on that to your investors on a regular basis. So all that is EU taxonomy and other legislative exercises going on in Brussels, which of course anybody involved in sustainable finance need to take very closely, let's say closely monitor those elements. You asked about Lux Flag also. Lux Flag is a not-for-profit organization created here in Luxembourg in 2006 with an aim to promote transparency within the financial sector. And how do we do that? By awarding label, or you may call it as a certification, for investment products. And when I say investment product, I mean funds or bonds which are active in the field of sustainable finance. So what we are saying is basically a labeled product, a labeled financial product, gives you a clarity or gives you a confirmation that what the product says is what the product is doing. What you see on the tin is what exactly is inside the tin. That's what we are doing, which means, of course, having criteria, having analysis of those products, and based on that confirming that what we see outside or what the fund promises to do, it actually does that thing. And that's what we do. We label about 200 products with over 100 billion assets under management. Though based in Luxembourg, our work is quite international. The funds are domiciled across several jurisdictions in Europe. Funds invest almost worldwide, distributed worldwide. Investors are coming from almost everywhere on the planet. So yeah, pretty international work. In short sense, we are promoting sustainable finance through labeling sustainable products.
Thanks a lot, Sachin, for that, and I think for clarifying, because this is, we always get this question a lot in our webinars about taxonomy, because people think that's something got to do with tax. So, and it's very confusing for people on what's the relationship between sustainable finance. But thanks a lot for telling us the chronological sequence of events as well, because that gives a much better picture of how things are. So what I'm going to do at this point is I'm going to launch the poll, because we have 4 minutes till the end of the session. And in parallel, we can take a question, which is a follow-up by Laura to the earlier question on project financing. So to everyone, what we're going to do is we're going to launch the poll, so you will see it on your screen. We're going to ask you to rate the session, as well as what we had said in the front, how much financial jargon did we use. So please judge us and rate us. So while we have the poll launched, Sevan, I will actually start with getting your comments on Laura's follow-up question, which is more around, so it's great that we're seeing larger interest, it's great that we are seeing mobilization for finance, but what about innovation in terms of new financial products in green finance? Do you see innovative structure, blended finance kind of instruments, or other financial instruments coming up, which can actually help in financing green projects and make them grow faster?
Yes, a few points on this. So what we see is that there is a lot of innovation. First of all, there are more and more funds being created, and we're trying, at least at the scale of the Belgian ecosystem, to cover the whole spectrum of companies, from early stage, even pre-seed, to startup, to scale up, for making sure that we have enough financial tools to cover the needs of entrepreneurs for all those different stages. So what we see is that we have, actually there are more actors at the later, more mature, let's say, scale of company, stage of development. And those actors, they're now understanding that they need to be actually more active at the seed level as well, to already have a link with entrepreneurs at that time, and to basically support them and accompany them to the later stage of investment. So what we see is that there are more and more financial tools that are being created for early stage projects. This is the first thing. The second thing is that we see more and more partnership and links with the public authorities for our members to be able to secure or to actually take some public securities for the investment that they're making. So we see more and more the public sector, at least here in Belgium, getting involved into new product financial tools, let's call them, where basically the private sector is not taking the whole risk. So this is also a part of innovation. And the third point, but this is a bit less my reality, because I think those projects takes a lot of time to be built, but we see more and more interest for social, more and more the employment agency here in Brussels working with social impact bonds, and I see a very strong interest from our members. They want to understand better the functioning of the impact bonds, and they want to start at their scale building their first impact bonds. But what we see is that I mean, and that's what Marianne and what Sachin have been speaking about. It's the challenge of collecting the data, and when we're speaking about small projects like quite early stage, which are not yet very professional with the way they collect data, this is very hard to put in place. So it's only concerned more mature company, but we are looking for now ways to implement social impact bonds at early stage companies here in Belgium. So this is for the innovation on the ground.
Thanks a lot, Sevan. Thanks a lot, Laura. I hope that answers that question. I'd like to close this session by just putting the last question to Marianne to answer, which again, we get a lot from a lot of retail investors, Marianne. Aren't most digital banks sustainable since they don't have the footprint of having bank branches?
Whether they are more sustainable, of course, that depends on whether they have sustainable data centers, right? So they don't have the brick and mortar. but they have the data and the algorithms that also can be consuming quite a lot. So, so it all depends on how it's set up, whether it's more sustainable or not. I think you cannot from sort of the outset say that just because you're digital, then you're more sustainable.
Thanks a lot. Thanks a lot, Marianne. And these are questions that we want to address at Step Up, because these might be basic, but they are very, very important, because these are some misconceptions that do exist. And like Sachin said, and Sevan and Marianne, we all agreed on, is that definition and communicating properly and being transparent about it has to be the start of it. And that's what we're trying to do a lot with MetaVest, and that's why Step Up exists. But thanks a lot. That was a very interesting discussion from 3 different angles, and we could put it all together. So I'm quite happy about the fact that we could cover all of this. And these are complicated topics. So, which is why I've just shared the results with everyone of the polling. And we did pretty well on the financial jargon side, because we are talking about a sector which is, and the questions that we got were very technical. So we didn't do a bad job, I would say. So thanks a lot for polling, everyone. And what I would do is I will end this session here. And I just want to thank everyone for joining us, Marianne, Sachin, and Sevan. So thanks a lot, Sevan. We will see you tomorrow for another session back at the festival. But thanks a lot for joining us, guys.